Sanlam's half-year normalised headline earnings per share is up 4%, with new business volumes up 22%. But joining us now in studio is the Sanlam Chief Executive, Kirk, this morning. New in the hot seat. Congratulations on a good set of results, Ian. When Johan van Zyl was stepping out, he mentioned that there were a few areas that he was going to be focusing on. He mentioned areas such as regulation, ensuring that the business strategy went ahead. So now that you are the new man for the job, what are going to be your key focus areas?
You know, I was with Sanlam working with Johan and Kobus Muller, the FD, back in 2006. I was responsible for strategy and capital. So very much the strategy I was part of. So I've worked with Johan over the years. So if there won't be any fundamental changes in strategy, I'm very comfortable with the way the group is positioned. And I think we've got a solid strategy. The market understands it. Our people understand it. And we'll go forward on that basis. There are, of course, any situations one has to lift your game to retain the leadership position that we've put together. And we'll have to address the challenges as they go forward. Regulation is certainly one. Technology is another one. The risk on disruption is another one. And of course, the economic times that we face, not just in South Africa, but around our operation areas, those are all things that have to be adapted to. So I don't think a new CEO will be a new strategy. It sometimes is, but not at Sanlam.
Let's address some of those issues around regulation. We have seen the financial services industry heavily regulated, treating customers fairly, being a Poppy Act, and now the FSB clamping down even harder on commission fees. We have seen that impact your SR operations. Just to give us a sense of how big of a factor this is going to be. Is there any way to circumvent this at all?
I think one has to adapt to me. You know, the regulations are there. South Africa will become one of the highly regulated countries. We're members of the G20. It's not something that our own regulator would necessarily want, but he does certainly support it. But a lot of the regulations we've got flow from our participation as a member of the G20. So one has to sort of accept that, and one has to adapt to it. I have to say that, you know, the regulator does engage with us on the new significant pieces of legislation like the RDR, which you mentioned. So we have an opportunity to discuss its application in South Africa. Yes, it's standard international regulation, but it's a question of how it gets applied here. It is a relative game as opposed to an absolute game, regulation, because it impacts everybody. So, you know, we can adapt better or worse than the average in the market. And our plan is, obviously, to adapt better. So it's a big feature, but it affects all players. And it's a case of how you adapt.
If you look at the regulation, again, just to go back to that point, do you think this is helping or hindering the industry? I understand that this is, you are a member of the G20. It's important to have, you know,
First
some
world,
of these. Exactly. But is this not a hindrance?
I think over the long term, it definitely helps. The fact that we are first world in our regulation, and assuming that we apply and enforce that at that same level, then I think it's a positive thing. As you transition it, of course, you do have an effect in that this country in South Africa, we have a first world and a third world element. And the third world element can suffer from the regulation in terms of the availability and access of certain of the products in those markets get hindered by excess regulation. So that is certainly a problem. I think our regulator understands that, and he's pragmatic. Him and his team, they're pragmatic towards that. But there are definitely unintended consequences to regulation. It does increase the cost of doing business, and that is an issue, as you've indicated, that we always have to keep on the radar. I think we can do better as a country on that, but there are positives too.
Let's talk about the rest of the African continent. You've been very aggressive in terms of expansion there. You mentioned here in your set of results that Zambia came under some pressure there. We know that you also spoke about going into Angola, Zimbabwe, also being an area there. Give us a sense of the operations there, and maybe let's start off with Zambia. What were the problems?
Zambia, we struggled. I mean, the currency halved in the year, and there's no ways that we can but not be impacted by that. But Sanlam, as you've indicated, we have an extensive footprint. We have a portfolio approach. It's inevitable that certain of the countries will struggle more than others. And one must look through the particular cycle and realize that this is a medium to long-term game. This will probably be Africa's most difficult year this year and maybe into next year, for the reasons that you understand. The oil, the commodity prices are down, the currencies are in turmoil is the best way to describe it. And those are things that we just have to weather the storm. You know, Zambia has hurt us, but we have a portfolio of approach, so you know, certain other countries have benefited. But overall, it's been tough, as it is in South Africa, where 70% of our business is still in South Africa, and it's been tough here, as you know.
I'd asked Johan van Zyl the same question, I think, a year ago, when we talk about the split between South African operations and the rest of the African continent. What does the future of Sanlam look like in the next 5 years or so? If we talk about revenue generation, who's going to be a more important player? Will South Africa still remain as important, or are we looking at growth coming through from the rest of the continent?
Yes, I think the strategy that Johan put in place has certainly made a significant difference to the diversification. We now 70-30. I mean, when Johan took over, we were 100-0. So it's not that we're targeting a particular thing. But if I look at a couple of factors, the one is that, you know, we continue to put capital into the African continent. We continue to see growth rates in Africa above those of South Africa for the medium to long term. And the big issue, of course, is penetration of insurance products in Africa is so much lower. So if we continue to apply capital and we continue to grow at a higher level than we do in South Africa, inevitably the 70-30 will swing more to a sort of a 50-50. But I want to stress that we're not targeting a particular percentage. But to answer your question, we will remain firmly a South African business. That is our home. That's where our listing is. It'll be the most significant contributor to our results, certainly in my time. And, you know, we're proud of that. We're proud of that.
It's lovely to see that you are still positive around South Africa, despite media reports saying that South African chief executives are not feeling that confident. You're definitely saying you're still very much South African.
I did read that. I read that. And I mean, one must accept the realities of the situation that we're in. I have to say, I've been in the country now 30 years. We've had worse times. There are things that we can do better, no doubt about it. And we have to work together, and we have to deal with this trust deficit. But, I mean, I do feel confident. I think this year will remain difficult. Next year will be difficult. But, you know, if we pull it together, we have a plan. We're not maybe implementing the plan so well as a country. And things are not, the wind is in our face. I understand those things. But, you know, there's a lot at stake here. So it's a case of pulling together and making it right. This is 70% of our business, so we have to get it right.
Ian, thanks so much for coming in and telling us more about the business and the strategy. We really look forward to having you more coming onto the desk to CNBC Africa. Thanks so much to the Sanlam Chief Executive, Ian Kirk.